back. In this video, we're going to cover Pathfinder channel dynamics and how price will interact with the Pathfinder basis and outer bounds, the upper bounds and the lower bounds. So in the first video, we covered that if you're above the basis and it's blue, you're looking for buys. If you're below the basis and it's red, you're looking for sells. Now let's talk about how this market will interact with your Pathfinder indicator. So one of a couple things can be happening at any given time. Price is either resting or running. Right here we see price resting. Okay, it's in a range. And right here we see price running. Okay, it's moving. It's price is going up. Okay, price could also be going down. Over here we see price resting, and then we see a run, and then we see a rest, and then we see a run. Okay, so visually we can just identify these, see where they are, and then it's very simple to make alerts. For example, if I wanted to make an alert to know when price broke out of the zone, I would just come on my trading view chart, come over here to the plus sign, make sure my mouse is at the level where I want to see the alert, click the plus sign, add an alert, and it'll set an alert right there, just like that. And if you right click on the line, click edit, you can edit your settings for that alert, as well as you can have it play a sound, send you a plain text here to an alternative email. You can have emails, toast notifications, notify in your TradingView app on your phone, which I recommend you have. So that way you can get alerts. Make sure you sign into your profile and you'll get alerts right on your phone. So there's an alert on the bottom of the channel. And then right here, channel squeezed in, we could have put an alert right there. And so when this breakout happened, you would get an alert to your phone wherever you are, and it would let you know, hey, price is moving. Or if you're away from your computer, it would let you know. Okay? So we'll go ahead and delete those for now. This is important because it's easier to make money when price is moving than when it is in a range or when it's resting. Okay? Easier to make money when it's moving. And on the page in front of you, in particular, there is a couple of trades that are quite simple. Okay? The first and simplest trade dynamic is off of the basis. So when price comes back to the basis and we see a wick like this, okay, that is a bounce off of your basis, which is a kind of like a running support. So in the larger waves, you'll see it pull back to this. In the fast waves like this, you won't see it pull back to the basis. So the basis is not always your only entry, but it is one of the entries and it is one of the reaction points of price when it's running. Your second entry is right here. Now you're looking at this and you're saying this point in space, because we see where blue line we're above, we're looking for buys. So here's your first entry type off of the blue line. Second entry type up here in the middle of space. So how do we know to get in right here? Well, that's where our outer bounds, our outer channel bounds comes into play. Okay? If you look left, right here, price pushed up and it pushed the channel up and it made a high before coming back down and touching the line. And so what you do is you take your tool here, this is called a trend line, okay? You take your trend line, you hold down the shift key, otherwise it will just do this, it'll follow your mouse. If you hold the shift key, it'll lock to certain points on the grid. And what you do is you take it on that line and you extend it right. And now as price comes back over that line, that area, okay? What you're looking for is you're looking for, on the 1 minute time frame again, we're looking for what are called wicks. You have your candle and then you have the candle wick. A candle wick shows us that in that time, wherever price opened, it pushed down, and then there was support there, and the market pushed back up from that support level. And that right there is your entry. Okay, when you see support from the previous high in the market, so the market pushes up, comes back, makes a higher high, pulls back to the area of the high here, finds support, and then the market should continue. This is your area of entry that's in the middle of space, and the way that you find it is you look left. You have to look left and mark up these areas. See these long flat lines? If you look, this one right here was a double confirmation. It came back right here, tested this area, wicked, but it also tested our blue line, which was the better entry. But it wicked off of it, wicked off of this, and then the market continues upward. Okay. Then we have this area of support, which the market rejected from twice. And that was resistance. Okay, so this is called resistance. And then when price broke it, we have a retest, and then the market will bounce from this level, potentially. And now that area went from being resistance, and now that area is now support. Okay? So we have a breakout, retest, we see the wick, that is your entry right there for the buys. Boom. This move off of that is 268 ticks. Okay? If you were to take this entry on one contract, this is over $1,600 just on one contract at the peak up here. Okay, that hit $1,695. If you're trading a $50,000 account on Top Step and you have $500 as your target, or $750 as your target, or $1,000 as your target, or whatever your target is, you've hit it in one trade entry. And that wasn't the only one. You had this entry back here. One contract, boom, pushes up, finds support again, from one entry point that in price never came back to, up over $3,000 here at the top. Okay? That's with one contract. That's with a 50K account on one contract, okay? So very, very lucrative moves in the market here from doing your own analysis, looking at that and looking for the wicks, okay? Looking for the wicks at the points of support, okay? This was a point of support because the market has an interest in this area right here. If you think about it, there are a lot of orders in this market, okay? There's a lot of money bunched up into one area here. If I was to use my session volume profile tool, or fixed range volume profile tool, and I mark this up, you'll see these bars here show this is the area that has the most orders in the entire market. This entire move, most of the money is sitting in here. That drives the market higher. So all these buy entries and sell everything, this money drove the market higher. What price will do is price, after it breaks out, will often come back to our point of control, which here is represented by the green line, it'll come back, touch, and reject. The basis, the reason you don't need to really have this is because the basis is already at that level. In fact, you can see that my basis adjusted to that level right here where the majority of those orders were. That basis came right to that level. And then right here, it adjusted, market comes to it, bounces off, and takes off for a run. After that happened, that's where your money-making moves occurred, okay? And the Pathfinder channel and the basis helped you to see that, okay? Put some sevens in the chat if you guys are following with me right now. If you're understanding the levels of support and resistance. In the market, they're just the highs and the lows. They're just the highs and the lows in the market. That's all it is. And what the channel is going to help you to do is to see these, because when you see where it rejects and you have this long flat line, you're going to be able to easily mark up these levels off of these long flat lines, okay? As price moves to the upside. Now, what does that look like to the downside? Well, let's go look at a selling move, and you can see. Right here, we have a very strong trend, one that is not coming back to the basis. It's all out in open air. And I'm going to show you guys how to catch these dynamically. Where previously with the Pathfinder indicator, where you're waiting for signals, it doesn't always catch these and it doesn't always trigger. I'm going to show you how you can catch these every time. Okay, so we're going to go back to our trend line tool. And what we're going to do here is you can see price breaks out from this area of rest right in here. Okay, it's in the channel and it starts pushing the channel. After it has pushed, here's what we do. We extend our line right, and for the sake of the fact that this is selling and we're looking at resistance lines now, not support lines, resistance lines, we're going to extend right. So here we go, the first breakout. Price comes back. We have a wick from this level right here, and the market continues. It also comes back and tests it again right there. Here we have another level. Why do we mark up these small levels? Because look at right here. Wick, continuation. Wick, continuation. Okay? And then again right here. Market comes back to actually touch it. Wick, entry, continuation. Okay, we have another resistance level right here. This one pushes past it, wicks, continues down. Now we have another resistance level here as price pushes lower, resistance, comes back to it, wicks, doesn't quite touch it, but it comes near it, market continues down. We have another one right here. We extend it right. And why do we keep it on the chart? Because this one extended once, twice, 3 times, and then came back 4th wick and a 5th wick right here from that level. Wicks, continuation. Okay? So you have these levels of resistance marked up. And you can see when it's really strong, it doesn't even come back to it. It wicks back in here. Okay? You can skip those trades. You don't even have to take them. Okay, down in here, it starts to wick on the bottom. Starts to wick on the bottom. Market pushes down. And right here you can see, from this level, you can see how the market wicks. And as it pushes down here, it pushes back and starts to invalidate. That move is over, okay? But there's another way to know when these moves are over, and you should no longer be looking to trade them, okay? Because what will happen is people will be taking these moves and they're making money, and then all of a sudden they're taking the same moves in the market, but the market has shifted and they're still trying to sell the market, and they're no longer winning. And why? Well, I'm going to show you why. If you look here, there's a relationship that happens between the the outer channel and price and the basis, okay? So we want to look at the relationship between price and how it responds to the basis and the outer channel, okay? When the basis goes flat and price pulls back, what you want to see is you want to see the basis push down and price push down. This is called confluence, okay? Or matching, okay? It's matching the pace, it's matching the trend, the basis is, okay? We see it again here. Goes from flat, begins to push down, price pushes down. We go flat, okay? Price pulls back, and then the basis pushes down, and price pushes down, okay? All the way in here, it's doing the same thing. Price is pushing down, the basis is pushing down. We go flat, market pushes down, the basis pushing down. Now, something happens right here, okay? The basis is pushing down, but what do we see price doing? We see price pushing up. This right here is called a divergence. The divergence is there to show you that you have a deeper pullback or the market move is done. The trend is done, okay? It's done. Your basis is pushing down and your price is pushing up. That means they're in disagreement with each other. They're not in unity. They're no longer matching, okay? They're not in unison. They're now working against each other. And that move is done, and you can see the result of that right here. The market pushes back, it pulls back, and then like the market does so often, it goes into a rest phase, okay? And that market rested all the way back into here and even beyond. In fact, this market, I would say, was resting all the way until right here, okay? So we had a divergence, pullback, and that market rested in this entire phase in here. And that is the relationship. Let's look at that on the bullish side of things, okay? Here you have the market going from flat, pushing up, and price pushing up. It's matching, it's in confluence, okay? Here we go flat. The market pulls back and goes flat, and then this starts to pull back and this starts to go up. That right there shows a potential deeper pullback or divergence. Let's see what happens. It was a divergence, and that market pulled back and then likely goes into a bit of a resting phase. Consolidation. Yep. Exactly. So this market began to range out all the way back into right here, okay? That was where the breakout. So it went into this consolidation range. After that divergence occurred, it rests before it moves again, okay? Price cannot move all the time. It moves, so it's running, then it needs to rest, and then it moves again. And that move could be to the downside or to the upside. That's not the important part. The important part is that it moves, it rests, and then it moves. And where we really make our money much more easily and predictably is in the movement, because it's very easy to identify the areas of support that will retest and come to back to moving again. So support flips to resistance, resistance flips to support. And that is the relationship between price movement, the basis, the outer channels, and where your entries are in the market. Now in the next video, we'll go in depth and we'll look at entries and exits in the market. Hope you enjoyed this video. We'll see you in the next one.